Hey guys, how you doing? This is Gavin, the host of today's show, Pips Like a Pro, with our resident professional trader and all-round financial guru, the Tony Robbins of trading, Mr. Andy Demi. How are you, sir?
I'm good, mate. How are you doing? How's your weekend?
I want to ask you, because my weekend ended fantastically well. And for everybody that's in the Facebook group, there have been a couple of requests to say, is there going to be a bit of a mention about the football? Now, for all those people that don't know and don't care about football, please just give me 30 seconds to gloat. And what we've got coming up for you on today's just let me have this 20 seconds.
Get them off. Hold on.
Wait. Oh, no, on a serious note.
There you go, guys. He's gone. So let him say what he's saying. That's it.
Oopsie.
Right, let's get what he's been at. Gavin's finished.
So on a serious note, you're probably if you're viewing for the first time, we're live on YouTube, we're live on Facebook, we're live on a new program called Share Vision. Whichever platform you're watching us on, welcome. We'll do our best to give you everything you need to know from the world of FX over the next 60 minutes or so. We're going to break down the biggest news of the week. We're going to do our usual 15-minute trader challenge where Andy will go live on the charts, do his analysis, and then find a low-risk, high-probability trading setup, which you can take away and do with as you please. It's not a full-on recommendation, so do your own research, but we're showing you what is possible. Now, back to your original question, Mr. Demi. How was my weekend? Well, as a West Ham supporter, who were playing...
No, we've had your moment, mate. We heard you. It was fine.
I didn't get to say anything. That's really rude. You should at least let all the anti-Liverpool supporters have their moment.
No.
Because what team do you support? What team do you support, mate?
Liverpool are very much loved by everyone, apart from Man United.
Yeah. Well, West Ham, we love you. We love you. You gave us 3 points, which was amazing. So very happy about that. Roy in the house. He was one of them that wanted to or maybe he wanted to know about the football. So there we go. Thank you for the inspiration. Brucey's in the house live on Facebook as well. We've got Nick live on YouTube. Hi guys, blurry Mr. D, crisp Mr. G. That's pretty much how we're known around the circles, to be honest.
I'm not blurry.
It's just not been a good 24 hours for you, Mr. D.
Maybe Nick's only wearing one contact lens on his right eye.
I mean, maybe, fair enough. But
could be that. So maybe his left eye's blurry.
Raj is showing her true colours. I never knew this about you, Raj. You're a Liverpool fan. Thank you for the 3 points. Much appreciated. We need it more than you. Boo. Blocks Gavin. I don't know if that's boom or boo because it wasn't a good move. I'm going to say boo. Monica's in the house as well. Thank you very much, guys, for tuning in. And always, I get this beautiful name wrong, so I'm not even going to say it. Andy can say it this week. But welcome to the show. I love having you here trying to break my brain on how to pronounce your name. So let's jump straight into it. Thank you for letting me have my moment to gloat. But now it goes back onto you. The shine is all about you, Mr. Demi, because we're going to be talking about all things FX. And one thing that definitely breaks people's brains, especially at the beginning, and even after a little while at this, maybe people might call themselves an intermediate, but they still don't necessarily know how to use Fibonacci to their benefit in FX. So we're going to try and break down a few little trading nuggets of gold bombs. And before we get to that point, just give everybody a breakdown so we're on the same page. What is Fibonacci and why should they give a crap about it when using it in their trading?
I mean, as I always say, like anything in isolation is almost useless, right? Like anything that you kind of use on its own. So it's important to firstly say there's no kind of magic in terms of one tool, but if there is a tool that has some magical powers, I would probably say it's the Fibonacci. Only because, Fibonacci is basically a numerical sequence. and that's all it is. And if you kind of look at some of our most famous buildings, for those that how flowers are created, which is a natural occurrence, they're all kind of done within these numerical sequences, which I think is very, very interesting. So that's kind of how we've known Fibonacci, and then it kind of and it works in the financial markets. Now, whether it's a coincidence, whether it's one of those self-fulfilling prophecies because everybody uses it, it really doesn't matter. Essentially, what it does in terms of trading, it gives us some hidden support and hidden resistance levels in the market. So the markets tend to move in waves, and the Fibonacci essentially predicts where those waves are going to happen. So they happen at specific numerical ratios. So the 50%, although it's not Fibonacci, to give you an idea of what we're talking about, is like halfway. So if something goes down 100 pips, say for example, and goes up 50 pips, you would say there's a 50%, retracement. So the market's gone up 50%. So there are different ratios, and some are more powerful than others. And it essentially gives us a great confluence as to where the market might turn. And it's very, very powerful. And it's one of my most used tools, I must say. So that's kind of it in a nutshell. That's basically what Fibonacci means. And like I said, it's about learning how to use it in conjunction with everything else. But for me, it's definitely a leading indicator. In other words, I would use it to make a strong case for where the market might turn, and then I'd use other tools to confirm it rather than the other way around.
Interesting. And just as a little side note, I can't believe I've never asked you this before. It's been over a year since we've been doing these. But when you did that trade, that mammoth trade, the $123,380, I think it was, did you use any of those then to lock in that trade? Did you use any of these indicators or any of these kind of setups?
To be quite honest, I've developed it a lot since then. When I was trading, in that kind of in the hedge fund world, it was a bit different. Yes, I used Fibonacci to keep it to directly answer your question. So that was one of the tools that I used, but a lot of it was institutions work slightly differently, as we've gone through in the past, without kind of going into that. It's more about information, supply demand zones, trapping, and all that kind of stuff. But certainly, yes, to analyze a market and to make a prediction, fibs were always part of what I did. But since then, I've developed it even to another level, where I've created tools that actually draw those Fibonacci's in for you, and they're a lot more accurate, and they can be back tested, so what you're working with. And that's kind of one of the one of the limitations people have with tools, indicators, is that they don't fully trust them because they're very difficult to test, right? So like Fibonacci being one, it's very much, the way most people use it, it's very much on the eye. So there's a little bit of discretion. So like, yeah, that looks like a high point, that looks like a low point. Let me see where the ratios are. So I kind of took it to another level, where I created that, rules around it, and then built an indicator that would show you basically the best points to select. And so, yeah, I've actually developed since those days. And especially these kind of tools are better for retail traders rather than institutions, although they do help institutions. Like I said, the game plan is different. Like what we're trying to do versus what institutions are trying to do is very different, just because of the positioning that they're in. Think about it like this: even as an investor, if you as an investor, as an individual, have a much better chance of making higher returns than a fund which has multiple millions under management, billions even, because they move the markets with their orders. We don't. So because we don't move the markets, you can just get in and out. So it's a very different game. So what I've created really is great for the average person to really help them get better, more accuracy, and more structure in their trading.
Cool. So give us a breakdown of how someone would use Fibonacci, and then obviously we can go into how you kind of created something different. But what is the basic premise for actual nuts and bolts of using it?
Yeah. So normally what you do is you look at a chart. It can be any time frame, and you're basically looking at, say, an up move, or you're looking at a down move, and let's say you want to go with the trend, right? So it's pretty much a trend tool. So you pick your high, you pick your low, and then you draw, the Fibonacci to identify, all the ratios. Like you've got 23.6, the 38.2, the 61.8, the 78.6, and these become areas where the market might stop going up. So like if the market's going down and you're looking for the move up to sell for it to continue to go down, or if the market's going up and you're looking for the pullback for it to go down, for you to start then buying it to go up. And what the Fibonacci is basically trying to help you is say, well, look, watch out for these areas, because this is where the market might stop going down or might stop going up. Now, and that's kind of really what people use it for. And sometimes it's not obvious what a high and a low is. And that's part of the problem with traditional Fibonacci, because you want to be using the same high and low as the market, ideally. And when it's kind of not so clear, then it becomes like a bit inconsistent. So that's why I think having rules around it makes a difference. But in essence, in a nutshell, that's really all it's used for. It's just simply to, find where the market might turn. And there are better, there are better ratios that most people look at, like the golden ratio is the most popular one, which is the 61.8. That's the one that would have, like, say, a higher weighting on my radar than something else, because I know that is something that a lot of people will be looking at, and including institutions. Okay, where is the 61.8 of this move? So I know that's going to attract, potentially some sellers or some buyers, depending on which way we're looking at the market. So that's kind of it, really. Does that make sense?
Guys, let us know. It doesn't matter what I think. Let us know in the comment section. We've got Brad live on YouTube, tuning in from Liverpool. I'm fighting the urge to say a comment, so I'm not going to say anything, but apart from thank you for tuning in live to watch the show. Roy's saying, are you saying price action, fibs, and then other indicators in that order? Well, yeah, I mean, basically fibs are kind of part of price action, because that's really all you're measuring. It's not a derivative. It's actually part of your studying price. So fibs I would class as a price action indicator. So essentially, when we say price action, you're focusing on, you're not using lagging indicators. You're basically looking at what is the market doing. Is it waving up? Is it waving down? And then a tool like the Fibonacci is just helping you identify where those waves are, but it's based around that price. You're not actually saying, well, this is the price, let me create an indicator based around the price. No, you're actually just studying the price. It's just a way of studying how the price moves. So that's why I say it's a leading indicator. So it's like this, imagine you look at the market, it's just saying, okay, well, this is how it's moving up.
I want to buy the next thing up. You draw your Fibonacci and you say, right, the 61.8 is there. People can just get in, right? You can just get in on that. But like you can use another price action related tool, like a trend line or support and resistance. These are all price action tools. But if you wanted to use other indicators, you could add, for example, the stochastic RSI, the RSI, the MACD, and you might say, well, when the market hits my ideal buy zone, then I'm going to use one of these indicators to help me time the market. So when I get across, I'll get into the trade. So it will be like you've made your decision on price, and then you can use an indicator to time the market. What that allows you to do also, without digressing too much, is it allows you to get in with tighter stops if you do that. So typically, if I'm using just price-related tools, you know, we will be putting our stop behind the swing, which means more room, but you're going to get a lower reward to risk. So, you know, we'd be looking at maybe a 2.5 to 1, whereas using something like indicators, you know, you can make that a 3-4 to 1 type of trade.
Awesome. So guys, let us know if you've got any questions around that. Hopefully that's given you a bit more awareness of what Fibonacci is and how you can use it. But if you've got any specific questions, let us know. What we'll do is we'll come back to this with the questions. Let's jump into the biggest FX news of the week. Let's break down the news. And then before we go into the live chart analysis, we can go over the questions then. So you've got a couple of minutes to have a think, guys, and then get your questions in.
Yeah, absolutely. So, you know, I think it's important to actually just look at last week as well, because we had a lot of data. I was happy to see that the Bank of England kept the rates the same for the UK, but I think we're very close to a hike in the UK. And we had some actual bullish numbers come out from the US as well. So we had employment numbers really strong on Friday. Previous 312, expected 455, came in at 531,000 new jobs. Lower unemployment, and the hourly earnings, although they dropped from, you know, the previous 0.6, they kind of came in line with what was expected. So pretty much a bullish set of data for the US. And you know, it did spark a little US rally. I've got to say, it wasn't as big as maybe you might have thought. I mean, I guess the you know, the disparity between expected and what came out wasn't huge. Like, there wasn't a big difference there, but still, nonetheless, it was good numbers. And we did get a brief rally in the dollar. And then it kind of came back after that, like a couple of hours later. But yeah, but overall, pretty bullish for the dollar. And in terms of like this week, you know, I mean, we're anytime you know, Fed Chairman Powell is speaking, it's important, especially in the current climate. There's so many different things going on in terms of the economy. You know, when is the hike going to happen? They've introduced the you know, the tapering from this month. So in other words, they're going to reduce the stimulus for the economy by 15 billion a month. And you know, and that's kind of likely be the case unless something happens, you know, for example, you know, another lockdown or whatever. But at the moment, the US economy is looking strong. So I think we're just really looking at, you know, when the hint is going to be there, when the hike's going to happen. Is it going to happen early? I think it's a matter of time that it will happen, unless, of course, something happens. You know, there's a lockdown or something else. I think, you know, the likelihood is that there will be a hike in interest rates, but it's a question of when. And every time there's a speech, you have to kind of be aware, because there might just be a hint there as to whether things are on course, whether we're going to speed things up, all these kind of things. They're just little clues that you have to kind of look out for. So that's today. And then BOE governor speaking as well a little bit later on at 5. And then again, it seems like the Powell speaking every day. Every time I look, he's saying something. So he's on again tomorrow, as is the BOE governor. And then on Wednesday we have CPI again. This is important. We want to see how the economy is doing. I mean, because again, this is going to influence the future rate decisions. We're expecting inflation to go up to 0.5% from the US from a previous of 0.4. That's that's a sign of an economy that's doing well. Okay, if that actually does happen, and that kind of really hints as to why the tapering is taking place. And on Thursday, we have employment numbers coming out from Australia. Previously down 138,000. We're expecting a positive number this month of 50,000 new jobs. So we'll see what happens there. That's kind of midnight for us in the UK. And we have some bank holidays as well. So Thursday, bank holiday in France and Canada and the US. So it could be a slow one. There might be, the volume might all go to the Aussie. And that kind of is it, really. I mean, this is not really anything to kind of concern ourselves with. That's the currency report. So, yeah, a lot of kind of speeches and things. Sometimes it's quite hard to trade those. And then, of course, the inflation numbers are going to be key on Wednesday. If you have a bad inflation number, that can cause, a drop in the dollar. Especially as we are pricing in an economy that's getting stronger. So that's kind of wraps the news up for this week.
Cool. So with that being said, what are some of the currency pairs that jump out to you that you'd be interested in, that just kind of sparks your spider senses and says, okay, I think there might be some opportunities in these pairs?
Well, I actually wanted to look at a cross pair today, and I wanted to take a look at something like the Euro Aussie. So we don't have a lot of Euro, we don't have any Euro data. We've got, I quite like that we have employment numbers coming out on Thursday. It gives us the whole week to get into a nice position where, you can potentially, catch a move and even lock in some profit. And if the data goes our way, then you can potentially catch a really big move. So yeah, Euro Aussie would probably be something that I would be interested in looking at. The US and sterling, I'd probably, in general, would probably want to stay away from it on the first couple of days of this week, just because it can get messy. So sterling and dollar I would avoid. And a CPI on Wednesday could be important, but again, it's I kind of favor the cross pair. I think that makes a lot of sense to look at today.
Cool. Okay. So with that being said, I'll give you some time to get your charts up, and I'll just get my little graphic up.
And also, it's quite nice for people to look at a different pair, because I know we like to look at the dollar pairs.
Cool. So we are just about to start our FX trade in 15 minutes challenge. So this is where Andy will look for a low risk, high probability trade by doing his live chart analysis. Today, we're going to look at the Euro Aussie. Is that correct?
Yeah, we're going to take a look at the Euro Aussie on multiple time frames to see where the opportunities are for a potential trade.
And then we could, so we're open to anything, right? It could be a day trade, it could be a swing trade, whatever it could be, or it might be a mixture of both. Like sometimes you come up with a couple of options. So with that being said, let's jump into this trade setup of the week and see what we can find.
Okay, so let me just start from the beginning. A little zoom out. So I'll just clean up a couple of things that are not going to be relevant right now. So let me just share with you guys what I have on my charts. I think that's important. So we have the moving averages here. So we have the red, which is the 50 moving average. We have the green, which is the 200. And I generally like to have them to have a look to see where we are relative to that. And, you know, sometimes we go through periods where the market can kind of just go sideways as well. It doesn't tend to do it too often where the cross happens. You know, generally speaking, the cross happens and the market goes lower. Where these are also very useful is, you know, if you look at the lower time frames, you know, then it can kind of be a bit more dynamic. So you can see here, the market crossed above and then it crossed below. That's kind of a sign of, you know, maybe the market's getting a bit rangy right now when you see that sort of quick cross up and then quick cross down. So what I've done here is I have basically taken this channel support here, and you know I've noticed that the market likes to generally hold on there. Now you might notice like it's not perfectly drawn, and that's not by accident. Like you might see, for example, oh, hold on a minute, the market's going through that. Now that would put a lot of people off, but actually what we're trying to achieve here is to find a line that the market likes to react on. And because sometimes the market's going to break, especially in currency pairs, it's going to break a line and then go back up, go back through it. But what you're looking for is the market reacting there? And you can see, if we just carry on, and there's more weighting, by the way, there's more weight to more recent price action. So the most recent price action here, you can see this line was quite effective. And what I particularly like is that we broke through it, we came back, we tested it, and then the market went lower. So I'm just kind of using that as a parallel. And I quite like that. Here's what happened. So we used this as support. The market actually came back to this level. It did act as support. If we just kind of zoom in right there. Okay. It acted as support. It bounced. And then, as I was saying before, similar to what it did before, if I just show you, remind you, where was it? So it was here. So it went through it, and then we eventually came back and acted as support. We could be looking at something similar on this line that we have here. So let me just get back to where we are. Now, what I really like about this is that the market has basically broken back above this line. It's created this morning star candle formation. I really, you know, I think that the volume is okay. You know, good volume there, lower selling volume. Hasn't quite picked up yet in terms of volume. But I really like the idea of looking for, since the theme is Fibonacci, looking for a Fibonacci pullback to potentially buy. You know, with a potential target, you know, possibly back to this zone here. So that's what we're kind of looking for. We're looking for something that is quite easy to achieve. Now, some people might want to try and get this market to go all the way back up here. So if I just extend this out, like, you could make the case for, hey, this could go back towards the upper part of this channel. And that is true. It could do that. But that's a very, very long way away. And you almost become an investor if that's what you're doing. And things, I mean, you could be stuck in this for such a long time. My preference is, I want to really, if I'm going to take a swing trade, I'm looking for one swing, because this up here will be multiple swings to get to here. I'm looking for one swing. Okay, so basically pull back and then catching the swing and then out. That's pretty much the game plan. So what we want to do is we want to identify some levels that could kind of act as our, against our trade. So if we're buying this, we want to see where are the sellers going to come in. Well, you can see that these zones here are acting as support zones. And so naturally, this should be the upper part of our target, around that 159, approximately. Okay, so what do? Well, we can do this in a couple of ways. We can stick to the daily chart. We can take our Fibonacci tool and we can draw from high to low like that. Okay, and I'm just going to zoom in here. And you can see that this here is, so what we're looking for, this here is our, what's called a super shallow pullback. Okay, we don't want to buy this here. We want to ideally wait for a pullback to at least the first red line, which is the 38.2 Fibonacci retracement. And ideally, it would be great if we can get it at the 50 or even at the 618. So what I was saying before, Gavin, is for most people, if you're going to buy it in this kind of zone here, and you can also see, guys, that this is a nice old resistance that becomes support. So if I could give you a textbook trade, it would be, right, let's see if we can get it back to here and then take it up to here, right, which is where the red target would be. So you can see here, guys, it's all color coordinated. It's a red target, and it takes you really, really nicely up to the 200. So ideally, you want to be buying here to target there, and you'd be putting your stop there. That's really a textbook swing trade for something like this. Okay, you give it that room, that breathing room, especially in light of news coming out on Thursday, which can create volatility. And you come up with a target that is achievable, and you can see there the Fibonacci target is just below this red line. That's what you want to see. You want to be out of this before the sellers get interested. So you could be literally looking to buy this anywhere from here, which is 159.40. The ideal buy zone would be about 154.73, and your stop would be approximately 153.04. Now, what you can also do, so that's one swing setup that is very much playable. If you go over to the 4-hour time frame, you can also look at the 4-hour chart. And what I quite like about this is that it kind of makes it a bit easier to see how the trend, how the buyers are actually starting to take some control back. So if I just bring in my pen that I can easily just erase, let it load up, I'll show you what I mean. So, and this is where price action is kind of like, you can see the markets are generally doing this, right? Like these lower lows, lower highs, lower lows, lower high, lower low. See how the, we break this low here, and then for the first time in this trend, the high gets broken. Right now, so far that's the low that's been created. Now, it could be a case that that is the low and this market's just going to go higher, right? That's possible. And this is where having multiple strategies is, you know, it's not necessarily important, it's not necessary, but it definitely gives you an edge. Because, you know, for somebody who wants to be a swing trader and you place your orders, you know, what happens? Sometimes you place your orders, you've done all this great work, and the market just never gets there, right? And then it never gets to your first order, and this market just explodes higher, goes to your target without you. And, you know, even though you found a great trade, you don't make any money. For those that, you know, the way we teach you, like, you can day trade this stuff. You know, you could be playing breakouts if you want to. So you could literally watch the markets and go to the lower time frames, like your 15-minute charts, and start to trade, you know, day trading style. And that kind of potentially gives you an edge. But, you know, I think personally, like for most people, it's just about finding enough trades, and you will get filled on enough to make a good return. So if we just take this as the last thing, I'm going to just plot the Fibonacci on the 4-hour time frame. I'll use the tool just to make it a bit easier for us. So that plots the current Fibonacci. I'll zoom in to the current A, B. So here's the current AB. Let me show you it because it's easier if I show you. AB, C, hasn't quite reached the 38.2. Very, very close to it there. That's the 38.2. That's kind of where you'd expect. That's really where you'd want to be buying it as a minimum. But this is the ideal buy. And like I said before, if you can match it up, like here, there's a nice resistance point, right? That was also quite a decent support. And then a little bit lower, you can see this was a really nice resistance point. So this little zone here becomes a really nice, interesting zone where you can buy it. And then if you notice, the 4-hour target is a little bit lower. So you've got a target of 157.50. So if you wanted to go for something smaller, that would be your kind of target there. So your R to R will be lower on a 4-hour chart, your reward to risk. However, the time it takes for it to get there is going to be less. Plus, you know, there's less risk in terms of, you know, something happening. Now, whereby, you know, you catch a move and then your target's up here, and then the market, you know, reverses and comes back to your entry, for example. So there's less time for anything to affect you. So as we know, on Thursday there's news. Now imagine the scenario, guys, like this market doesn't do anything and you're just still here. You know, in that case, what would I be doing? I'd be looking to put an order in at my favored price. So the minimum would be this third red line, the 618. That would be so either there or lower, basically, because you can use the volatility in the news to basically get your price and then hope that there's an overreaction to the news and then the market just bounces up. Okay, because the market will generally go where it's supposed to go, no matter what the news. And often the news is just a noise that can allow you to get into the trade at the best possible price. And that pretty much completes the setup for today.
Awesome work, sir. So that is our weekly Pips Like a Pro trade setup of the week with Mr. Andy Demi, where we've just taken 15 minutes of your time to go through the charts live. And we found not one, but two low risk, high probability setups. Obviously, they are kind of dependent upon the news. That was the whole reason why we've picked them out. If it doesn't make total sense to you, then the beauty of this is that it will be replayed. So Facebook user, please log into the StreamYard link so that we can see your name and your photo, like Anita, who's also logging in live on Facebook. And then we know who we're speaking to. But yes, to answer your question, it will be replayed. Check out our YouTube channel to get the replay in probably about an hour or 2 hours time. We'll have it up for you, and then you can just re-go over that and really start to kind of dig deep and hone in your skills. Mate, that's been a really good show. We started off by breaking down Fibonacci. We've gone through the biggest FX news of the week. And then, like I've said, we've just finished the trade setups, the FX trades in 15-minute challenge. Another one is done. Is there anything else that you want to talk about before we go? Because there isn't any questions, which is great. It means everybody's all understanding it. Everybody's all at the same pace. Sometimes different weeks, there's different paces and different levels, which is great. So before we bounce, is there anything you want to say?
No. I think that's pretty much it, really. If you enjoyed the show and got value from it, please like our
yes, good point.
And comment. It does help us a lot. But yeah, no, I mean, I think in general, I think what's good is we do this every week. We're here. We're committing our time. So do send us requests as well. It makes Gavin's life easier as well. It makes our life easier. So if there's any things that you're interested in, or if you've got any questions, I think it's always a good idea to use the group. It's a great community, and use the opportunity to ask questions, guys. Don't be shy, because I know it's sometimes it's daunting. You don't want to ask a stupid question, but really it's we're here anyway. It makes sense to ask if you have questions, but hopefully that gives you a bit of an insight. And for those that are new to trading, sometimes it can look complicated, or or you may think you understand it, but then when you try and do it yourself, you can't do it. It's just all very normal, and it's just part of the growth that you're going to go down. So don't worry too much about that. Just focus on learning bit by bit, and and that's it really from me.
Good point on that as well. And if you're interested in some extended free training, I'm going to post a link for a webinar that we took about an hour and a half to record. There is a ton of value in that, so make sure to check that link out as well. And Raj, we try not to cross over, but tomorrow is the Crypto Like a Pro show. Again, same time, same place, from midday UK time, with me, Gavin, the host, and our resident in-house trader, Mr. Andy Demi. Lots of great things to share. And I think that's kind of what you're alluding to, because you've been waiting patiently all week for some sneak preview news. So we'll give you more of that update tomorrow, Raj. Yes. Thanks for your advice, Andy, as I am a beginner. So make sure to check out that link that I'll post shortly after the show. And we will see you tomorrow. So guys, enjoy the rest of your day, whether it's nighttime like it is over here in Oz. It's a really humid, sweaty Oz tonight, but never mind. Is it started getting cold yet in the UK?
Yeah, it is quite cold, to be fair, but yeah, not extremely cold. It's okay, to be fair. It's all right.
Cold like our audience. 3 likes and 1 heart. Out of all the viewers that we've got, come on, guys. Give us some love. Well, not just us, but just it helps Facebook and the old algorithm malarkey. So don't do it for us. Do it for the Facebook channel, for your fellow crypto and FX Traders Club family. We've increased. It's working. Thank you very much, guys. We love you for that. We will see you tomorrow. Have a great day wherever you are, and we'll be back tomorrow with the crypto show. And Roy, we agree with you. Great show as ever. Take care, guys. Bye.
Thanks, guys. Take care.